Most semiconductor stocks that we are following are now in a technical bear market, which means they are down more than 20% from the highs that they've made more than recently. Is this the end of the semiconductor trade, which has been just working out so beautifully over the past year and a half? Other stocks are even in worse territory. You look at Supermicro and Intel, which we'll talk about on today's show. These stocks are down 50, 60% from the highs that they've made just earlier this year or recently. Is the semiconductor industry a good buying opportunity? We'll spend a lot of time on today's show looking at the technical chart, looking at areas where buyers have stepped in historically, and can you step in and buy the dip on a lot of these stocks heading into next week? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. We've got a big show, so we better not waste any time. We're going to kick things off like we always do with NVIDIA, the big boy, right? Terrible week from a price performance perspective. Not a ton of news, as we'll get to, out of NVIDIA, but the shares were down over 9%. We are well off the highs that we made earlier this year at $140 per share. Will NVIDIA find a bid at this critical $100 level? We'll show you that when we get to the technical segment. Now, what we talked about on last week's show is there's still a large discrepancy about the future of this company in terms of revenue. Now, the upcoming quarter, the third quarter, we have guidance from NVIDIA right in this $32, $33, $34 billion is where we're expecting the company to come in from a revenue perspective, and Wall Street is kind of congregated around that 32 to 34, maybe even as high as 35 billion on the revenue side. That would represent about 81% growth year over year. Now, the big question though, and it doesn't look like it got solved, is what is the upcoming few quarters going to look like for NVIDIA? You look at just the Q4, which starts actually later this year. The quarter for NVIDIA, they have a slightly funky fiscal quarterly system, but it starts at the tail end of this year and ends in January. Well, Wall Street still hasn't had any kind of consensus. The low end is $33 billion in revenue. The high end is $43 billion in revenue. You got a $10 billion gap. And as you start to look into next year, that gap not only holds, but starts to widen as you get just into Q2 of next year. It widens to about a $15 billion gap between the low end estimate and the high-end estimate. And as you stretch into the back half of next year, you've got over a 20, sometimes as high as a $55 billion gap between the low and the high-end estimate. I challenge you to go find any company of this size, and there's not a lot of the size of NVIDIA, but any other semiconductor company with this big a discrepancy between the low and the high-end estimates. These revenue estimates that end up being formed from kind of the midpoint of the analyst consensus, well, these could be skewed one way or another depending on where NVIDIA falls. And I'll give you some headlines that I think cross this week to give us indications that NVIDIA is probably likely, much more likely, to come towards these high-end estimates than these low-end estimates, and that certainly will impact the stock going forward. Now, one black cloud that potentially could hang over NVIDIA is not just the single-day market cap. The company has added a ton of market cap, maybe a record amount of market cap over the past year, so we've got to expect some giving of that back, but we have this DOJ antitrust probe potentially into NVIDIA. Now, the company denied the reports earlier in this week, but I think we've got confirmation that there's at least some smoke, maybe even some fire going on in Washington, D.C., as a senator, prominent senator, Elizabeth Warren, says she backs a DOJ antitrust probe in NVIDIA. I don't know why she would put out a press release or a comment on a DOJ probe that is non-existent. You got to imagine there's something going on there. But we got two headlines that I think more or less reinforce the bullishness whenever you listen to Jensen Huang on a conference call, whenever you look at the high-end estimates for NVIDIA on the revenue side. There is some support that all of those things are going to come true and going to come to fruition over the next 12 months. And the first is Taiwan Semiconductor. They obviously would have quite possibly the greatest insights into whether or not NVIDIA is going to meet their revenue expectations or not, because NVIDIA has to call up and get on board with Taiwan Semiconductor and get them to ramp up all their manufacturing processes, ramp up all the raw materials that they're going to need to deliver all of these GPUs and these semiconductors. And Taiwan Semiconductor said this week that AI chips will will continue to spur the industry growth. The CEO says this booming of the AI industry has just begun. For the most prominent company, I think we know who that is, the equipment we sold them probably increased 2 or 3 times in the past year. And if he's saying it's just beginning, I think we can, as investors, start to look for other signs that things are just beginning. And those also came across this week. OpenAI is looking to raise billions and billions of dollars from prominent investors and prominent companies. We reported that NVIDIA and Apple are on board potentially for an investment into OpenAI. And OpenAI CEO is aggressively trying to grow the company. And he's trying to build infrastructure in the United States that will cost tens of billions of dollars. The project includes data centers, which obviously would be beneficial for the vast majority of the companies that we talked about, growing energy capacity as well, and expanding the semiconductor manufacturing business, which also would be interesting here in the United States. I think the more we look at the commentary from the large semiconductor customers out there, and for NVIDIA in particular, that's going to be Microsoft, that's going to be Meta, that is going to be OpenAI, which is also part of Microsoft more or less. Also, you look at the advancements of the large language models, how Claude and Anthropic and OpenAI, they're getting closer from a capability perspective. So OpenAI is sitting there and getting a little bit nervous. They're seeing these other GPT models that are as good, maybe in some cases better than their model. So they're going to continue to push the envelope on a development standpoint. And the way you push development from a technological standpoint is you order more and more compute power, you get more and more access to data, and that is going to require more and more NVIDIA chips. I think, folks, as we move into Q3, NVIDIA will settle in on this $34-35 billion mark. It will be critical when they announce their earnings, probably towards the end, I assume, of September, is this January quarter number. Can they come close to this $44 billion? If they do, that will clearly, easily reaccelerate what we've got going on with NVIDIA. Now, speaking of accelerating, but not in the right direction, Intel Corporation crossed under $20 per share. In fact, I think we hit a fresh 52-week low on this stock down here about $18.65. Now, over the past year, Intel stock down over 48% year to date. This is a Dow component as well, down over 62%. In the news this week just simply did not get better for Intel. The company is considering selling more of its stake in Mobileye. Mobileye is actually a public company, ticker symbol MBLY. Unfortunately, Mobileye 52-week range goes from $44 all the way down to about where the stock is right now at $11.45. And I think investors are correctly selling this one off, not necessarily from any kind of fundamental or technical aspect of Mobileye. But here's the deal, is Intel still owns 88% of Mobileye. And if they are going to use Mobileye like an ATM card, well, what do you think is going to happen to the selling pressure of this stock? If Intel says, oh, a stock on its 52-week low, we're going to come in and sell maybe a significant portion of our 88% stake. Well, there's not a lot of buyers of Mobileye stock over the past year as shares are down 68%. Intel coming in as a seller is probably not going to do any good. My guess is Intel is floating these press releases out there, wondering if there's maybe some type of private buyer, somebody that will step in and buy the stake off of Intel off of the open market to mitigate any type of pressure that is already on Mobileye shares, let alone if Intel comes in and sells even more. Now, the analysts are starting to chime in with information that we already knew about Intel. Most of you, I'm sure, could open up Intel's financial reports and surmise that this company probably shouldn't be in the foundry business. And this is something that is costing them from a CapEx perspective. Also, when you look around the semiconductor industry, they've all basically gone away from this design and foundry model. Back in the day, you used to design and try to manufacture. NVIDIA, AMD, Intel, many of these other companies basically did that, but they found that these are two completely separate businesses. And they are both very difficult businesses, and to try to do both at the same time is basically moronic. And that is what Intel is doing. And finally, analysts are seeing the writing on the wall after the shares have just declined rapidly over at Intel, and Citi saying that they should exit the foundry business. Now, their contract manufacturing business could have a setback this week. Intel, again, trying to focus on two things at once, and instead of being a master of one, either chip design or foundry, Intel is trying to be a master of none, more or less. And they faced a potential setback this week as Broadcom, as you'd expect. Companies like Broadcom, probably even Qualcomm as well. I think you could throw NVIDIA in there as well. They would love it if Intel could build up their manufacturing chops and their manufacturing business. It would just give them another avenue in order to not only manufacture equipment, but also put pressure on Taiwan Semiconductor, which is basically has a monopoly on these high-end chip manufacturing business. Well, it would be able to maybe have some downward pricing pressure over there. Unfortunately, test likely with Broadcom this week disappointed, and Broadcom, like many other companies, still waiting for Intel to prove that they can actually manufacture businesses. And now you've got other companies out there swirling in the marketplace. Intel is like an injured athlete, and many people are wondering if it can actually come back from that injury. And Qualcomm is eyeing pockets of Intel's design business as Qualcomm's making headways into AI PCs and other types of devices, including we had a report this week that they may be potentially working with Google and others on some smart glasses. Qualcomm trying to pick up on some of Intel's design business. And so Intel's just got it coming from all directions. This is why the company really needs to divide up the company as much as possible, sell off certain types of pieces of this, and just focus, laser focus on one project, because all of these other companies with far superior financials are coming for the business. Now, which stock could replace Intel in the Dow as Intel shares continuing slump? Intel is a Dow component, and the Dow will replace you if you have poor performance. So Walgreens was replaced more recently with Amazon, and I guess potentially you could make the argument that NVIDIA could potentially replace Intel inside of the Dow index. Also, some other people saying could be Texas Instruments as well. Now, moving over to Broadcom. This company reported their Q3 earnings this week. Year to date, company shares are still up 22%, but after reporting those Q3 numbers, Broadcom shares slipped down over 10%. When we get to the technical segment, we'll show you, is this a good buying opportunity for Broadcom? Now, some analysts chimed in, and broadly, most people felt that Broadcom's dips following their earnings presented a buying opportunity. This is both professional and maybe unaffiliated analysts like on Seeking Alpha and other places were broadly kind of piling in and saying that Broadcom was a good buying opportunity. Part of that is the fact that you still have explosive revenue growth, largely due to the fact that VMware was added over the past 12 months to this company. Revenue came in at over $13 billion. This company continues to pay a quarterly dividend, which you pretty much can easily finance. They continue to buy back the stock when the time is right. They chose in the most recent quarter to pay down more of the debt that they acquired when they bought VMware over the past 12 months. So you might see a little bit of slowdown when it terms of buybacks. Now, the one thing that's maybe slightly concerning to me, or something that is not really exciting about Broadcom, is when you exclude VMware. If you take VMware out of the company and just compare the Broadcom of today versus a year ago minus VMware, after we've had such a sensational growth in terms of AI demand, networking, custom silicon chips with Broadcom largely works on, well, the business was up just 4% year over year. And so that's somewhat concerning, but I think we can draw some conclusions here in two different directions. First of all, is that NVIDIA still is the gigantic dominant player when it comes to AI accelerated computing. If Broadcom, which from a revenue perspective, I think they put up about $12 billion in the fiscal year in their AI revenue, that is basically second place from a revenue perspective. And so NVIDIA is so far out in front. This is why the DOJ is knocking on the door of NVIDIA. But the company was only able to grow its core business by about 4% over the past year. So it leads us to understand with Broadcom is this is a company that's going to have to continue to use the acquisition of other companies, software, maybe hardware as well, in order to continue to grow this business. Luckily for Broadcom shareholders, the CEO and the executive team of this company are fully capable of doing that. Now, moving over to some other disappointments of the week is Super Micro Computer. Despite the people getting in the comment sections of my video and saying, I don't know what I'm talking about with Supermicro. Well, clearly there's not enough buyers out there of the shares, because over the past 5 days alone, shares of Supermicro Computer slid 13%. The 52-week high on this one is close to $1,300, more specifically $1,230. And here we are sitting close to $386. Over the past month, shares have slid down 36%. Over the past 6 months, you are down 65%. Now, if you bought it at the beginning of the year, though, you are still up 35%, but those shares holders are getting smaller and smaller by the day. Now, Supermicro stock is down 60% since its inclusion in the benchmark S&P 500, and a lot of that has to do with the fact that they have a financial delay of their 10K annual report. Now, this week, the CEO, as he should, addressed some of not only the short seller comments, but also the fact that they delayed their 10K annual report, and he says, I quote, "Neither of these events affect our products or our ability and capacity to deliver innovate IT solution that people rely on every day. Our production capabilities are unaffected and continue to operate at a pace to meet customer demand. Our world-class engineering and support teams are also unaffected and continue to build and deploy large-scale AI solutions." Now, also as typical, when Hindenburg rolls out a short report, the companies tend to try to deflect the blame back onto Hindenburg. And he says separately, you may have also heard about a recent report from a short seller hedge fund that contains false or inaccurate statements about our company, including misleading presentations and information that we may have previously shared publicly. We'll address these statements in due course. Usually when they say these types of things, it basically means everything that was in the report is probably accurate. We'll have to restate some of these things in our 10K. We won't be suing Hindenburg as all of their information is likely accurate. Hindenburg has been around for a long time. They know if they put out false and inaccurate statements, their attorneys are going to get a big old bill and be in a big old mess. And so Hindenburg dots its I's and crosses its T's before it publishes any allegations against any company, particularly one worth over $22 billion, even after the massive drop that Supermicro has been on. And so Supermicro is still not out of the woods, but potentially could find some demand for the shares. We'll talk about that in a moment on the technical segment. And analysts largely are just playing hands off at this one as they are cutting the stock to neutral as the uncertainty around the 10K delay. My guess, if you get a restatement of the 10K and it's not drastically different, at least on the financial side, some of the disclosures and the nitty gritty will have to be kind of read through and parsed. But my guess is you get a restatement of this 10K that could give Supermicro a potential short-term bump. But until you get clarity there, you pretty much have no idea which direction this company is going to go in. Now, speaking of the technical segment, folks, we've got a major pullback. We'll zoom in here in a moment, but I wanted to zoom out. This is the SOXX, probably the premier semiconductor ETF owned by iShares. Wanted to zoom it out to point to you that this purple line is going to be what I would consider kind of our longer term trend. This dates all the way back to the great financial crisis of 2008, and more or less we've been on this. Now, there's been big deviations, right? We've had big overextensions over this longer term trend, and more recently, that's more or less where we've been in, really since AI kind of took off maybe in October of 2022, or more or less the market's done that. We have seen the SOXX ETF been in this beautiful technical pattern. Now, here we are down at the bottom of the range. If you believe this intermediate pattern is going to hold, you are buying this baby on Monday or Tuesday or whenever you watch this video. You are looking for a bounce higher, at least probably back to the middle of the channel. Shorter term, you could play a trade on this one. Could play a bounce from 205-ish or 200 back up into at least the middle of the channel up to 250. If you do that, you need a stop loss under the previous lows, which are right here at 192. So we are playing $8 to the downside to 30, 40, 50 to the upside. Those are the type of risk reward trades you want to do. Just make sure if you do this, You have a stop loss here at 192. If we break 192 on the SOXX ETF, you're likely coming back here, retesting. There's some sideways consolidation here at 170. Even lower than that are the previous lows all the way down here at 147. You would not want to ride this one all the way down, because then a back test just to break even is the best case scenario from a technical perspective, at least in the shorter term. Also, you have to imagine that this longer term purple trend line will serve as a magnet to price at some point with the shares of the SOXX ETF as pulling back to trend, not necessarily in the shorter term, but over time pulling back to trend is something that the shares of this ETF are going to want to do. Now, the SMH is in a slightly different configuration. If it's a slow news week next week, we'll compare the two ETFs. We'll look at the holdings, because this one definitely looks slightly different from a technical perspective. Certainly has a different configuration of at least its top 10 holdings and maybe its largest holding. We are at the middle of the channel, which as currently a black line will change to maybe a green line. These are areas where you can step in. You do have areas of support for this one here at 200. This one's not setting up like the SOXX as kind of a shorter term risk reward type of trade. This one could be that if you wanted to add to a position, you're long the SMH as a way to maybe put some semiconductor diversification into your portfolio. Maybe you have a bunch of NVIDIA and maybe some of these other semiconductor stocks, and to add and get further overweight the semiconductor industry, you add a little bit of SMH ETF to your portfolio as well. Or maybe this is the only way you get exposure here. This is an area where you add just a little bit of exposure. If you already have 100 shares, I could see adding a very small position, 1-2% more to that at these levels. Further pullbacks, which we'll discuss on certainly other videos, get further pullbacks on this one, you are definitely going to be more aggressive. Now, NVIDIA it's fine. Yes, it's down from the highs that you made earlier this year at 145, I believe, off the top of my head. But longer term, the trend is still intact. You are still way overextended on this one. Good thing for NVIDIA and its shareholders is there should be a couple of areas of support. There should be some support for the shares psychologically and technically right around the $100 level. If it pierces through the $100 level, it's not overly alarming. You do have some areas down here at about 75. The one area you don't want NVIDIA to really break through is the $75 area, because there's really nothing that would stop it until you get down to about $50. You get down to about $50 on NVIDIA, then you are getting really excited, in particular because of what we talked about really on the jump of the program, is if this company can come towards these high-end estimates as we get into Q4, Q1, Q2, Q3 of next year, well, at $50 with NVIDIA certainly gives you a lot of room to play with on the valuation side. Now, AMD broke through what I would consider a relatively significant technical area. This purple line is, in the very least, is kind of a shorter term intermediate uptrend that we've been making really since October of 2022. Now, we've kind of danced through it more recently, but it basically confirms that we are making a pretty steep lower high on this one. Should have some support down here. We'll change this to a green line down here at about 116. That'd be the first area where I'd be looking at this one. And this area down here, it's like 116 up to about 130. There's been some demand for the shares at this level. That would be the first area for AMD. Could come as soon as maybe potentially this week. We could talk about that next week. Big old red candle from a weekly perspective on Broadcom, as it looks very similar to NVIDIA, as it's just still in this beautiful, look at this beautiful technical trend that the company has really been on since the beginning of time. You're working your way off the highs with Broadcom. Nothing to be overly concerned about. Pullbacks with NVIDIA back into the kind of the 120-ish range. That would be exciting for me. That'd be your first area I think that you go. Now, unfortunately for Intel, they just have not been able to find a bid, or one at least that's enough to push the shares higher. You are seeing people step in at this $18, $19 level, and I could see the argument at some point with Intel is that all of the bad news is priced in, and these $18 levels, they start making the right decisions from a foundry perspective. They start exiting some of their other businesses. They get an influx of cash, maybe from selling off their large chunk of Mobileye. Well, this could be a company that could find some footing. You could make the argument that it's finally a value stock. I think we're still a ways away from there. And oftentimes too, you're just guessing. You're guessing that Intel is going to make the right moves. You're guessing that Intel is not going to turn into BlackBerry or turn into Nokia or turn into IBM after its, massive run in the 80s and 90s. You're just assuming this company is going to do it. I personally would wait for Intel to prove it. And even if they start proving it and shares start moving higher, well, it just gives you a margin of safety, because if you step in too early on this one here at 18, we could be sitting here at the end of the year and we're down to 10 or 12 on this one if they don't make the right moves, and that would be devastating from an investment perspective. Now, Qualcomm, I've got kind of a weird setup on this one. We've got to change the colors of these lines. We're not buying here at the top of the channel, but we're actually approaching an area with Qualcomm that I'm excited about. And certainly as Intel continues to fall on its sword, I like the prospects of Qualcomm even more. Pullbacks into kind of that 130 range. I think you can look at Broadcom and Qualcomm in a similar light. You get pullbacks back into kind of the mid to low 130s. These are your areas where you first start to pique some interest. Further down than that, you are getting really excited. Now, one of the reasons why we're not overly concerned with the semiconductor industry, at least from a technical perspective and certainly fundamentally as well, things still look pretty good, largely for all of these companies other than, the ones that we've talked about, Intel and Supermicro, not looking good. Well, Taiwan Semiconductor is looking absolutely fantastic. We've just continued a new higher high on this one. We are consolidating, maybe potentially moving lower. This one also, the 120s, 130s look really, really good for that one as well. There's nothing there that has me overly alarmed. Also, ASML, the leader in lithography machines that TSM needs to buy in order to make these high-end chips. This one also looking absolutely beautiful. Just confirmed a new higher high. We've pulled back to the middle of the channel. These middle of the channels are where you can start an investment. So if you on Monday or Tuesday or this week, you want to start a position in ASML at 750. There's nothing on this chart that is telling you that you shouldn't do that. In fact, this is the area you do that. Now, would I do my whole position? If you wanted 10 shares, which is a $700 stock, maybe we're closer to 5 shares for most people, most accounts. If you wanted 5 shares of this one, this is where you buy 1 share and you wait to see if you have some support here. Further pullbacks, like all of these stocks, will be aggressively bought. We'll be pounding the table on that when that time comes. Now, NXPI also very much at an area where you could add. It's been in a beautiful kind of upward channel. This one looking pretty darn good. ARM Holdings, we have to switch this to a daily view only because it hasn't been public for very long. We did break through this purple technical area, which I think we can kind of comfortably erase because we've really just confirmed a new lower high on this one. You should have some support though for ARM right at about $100 per share. You will have a gap underneath of that. And so if I bought ARM at like 100 or like 98 or somewhere in this range, I would have a stop loss probably under the previous lows right here about 87. So I'd risk maybe $10 to the downside with the idea maybe you get back up into this consolidation pattern up here at about 133. We'll address that if that comes. SMCI looks like it is absolutely destined to come back and approach this area of consolidation, which it did from June of 2023 up until basically the beginning of this year, January 2024. You consolidated between 220 and up to, we'll call it 320. You consolidated in this area. There should be a lot of buyers of the shares at this level. In fact, let's see if we can actually kind of illustrate that from a technical perspective. So you snap on these fixed range volume profiles and it shows you where the accumulation is, and there it is. Couldn't have drawn it up any better, made me look really smart. You had a lot of consolidation of Supermicro up here. And so this is the dynamic that you have on the stock. You have a lot of people. A lot of these people are probably in the comment sections of my video trying to tell me how stupid I am. Well, they bought Supermicro up here at about 875. If you've never seen these volume profile, what it is it's turning this volume that's on the bottom of typically a technical chart pattern, and then it puts it on the side and it shows you where you had large accumulation in terms of price. And so large accumulation for Supermicro occurred up here at 875. So those people are feeling the pain. If they have not sold already, they are likely not to get their money back probably ever with this stock. I don't think you're ever going to achieve that valuation with Supermicro and that level of hype for Supermicro really ever again. Now, A lot of people, though, bought the shares down here at 260. And so they're looking at their once massive gains in this stock, and they're getting whittled down every single time they open up their Robinhood account. It's getting less and less. And as we start to approach that, those people start to panic that a big gain is about to turn into at least, at best, a break even, if not a loss. And so you might have some selling pressure here. But these shareholders, what will be key for Supermicro is these people that bought here in the $250, $300 level. Will they step in and buy again, or if they sell? If they sell, my $150 price prediction comes true probably this year, believe it or not. And we will see this one slice right through this area of consolidation. It will slice just like we've sliced from 750 down to 300. We will slice from 300 down to 150, likely by December if these people decide to sell. We'll see what the news flow is with SMCI, but it's going to be very, very painful for the vast majority of SMCI shareholders. Very few people accumulated this stock before its massive pump from the financial news media. Most people bought these shares close to the top, up here at $900. A lot of people bought this one at about $253, and they are about to have decision day whether or not they want to add to a position, which is basically round tripped. Now, DELL. If you want to leave the volume profile on in DELL, you've got demand for the shares down here at 69. You've got demand for the shares overhead. This is usually not a good sign. Occasionally, you can have it pull as a magnet. To me, it looks like DELL wants to go lower. You move lower with DELL, you've got some exciting opportunities there. With Micron, we're approaching a beautiful area with Micron. It is illustrated by this volume profile. With Micron, you could probably stretch it out and it'll show you. Micron is a stock you can really start to put on like at the top of your watch list in terms of a buying opportunity from a technical perspective, probably fundamentally as well. We've looked at this one enough fundamentally. Micron's looking good. It's approaching this area. Now it is in the middle of a channel, which we've talked about numerous times here on the program, middles of the channels of these longer term channels. And this one dates all the way back to 2008. Middle of the channel is when you start to go on this one. Because if you wait all the way to the bottom, first of all, it might not come true. We haven't hit the bottom of this channel since 2016. And even on a weekly chart, if you're busy and you have kids and you have a family or you have a job or you have friends and you're going out and you're just living your life, you might actually miss the bottom of the channel on this one. So I don't tend to recommend that for most people. Start accumulating at the middle of the channel. That's where we're at with Micron. That's another one you can step in if you want to and buy on Monday. Speaking of potentially buying, here's a stock that's really held an upward channel since December of 2018. We're there. We are touching that line. We have not touched this line or even pierced through it much over the past 4 or 5 years on this stock. This is Lam Research, LRCX. That's also one where if you want to step in, you can buy that one. Also, Applied Materials, AMAT. We just reported earnings on this company. They looked good enough for me, so fundamentally, this one's fine. Depending on how you want to draw this channel line in, I could see some people drawing it in like this. So I actually think we're still probably a little overextended on this one, but we're pulling back anywhere into the 130s. There's multiple stocks as we pull into the 120s, 130s. I think it's Qualcomm, TSM, Broadcom, also Applied Materials. You can just kind of memorize that 130 number. You start pulling into that area. Just south of that is AMD. You start pulling into that number, probably Supermicro too. You start pulling back into the 130s. That maybe is when you take a look at that one, folks. That was the Semiconductor Show for Sunday, September 8th, probably coming to you on Sundays. I think I said Saturdays. We'd love to publish it on Saturdays. That will happen here very soon. My son's got some athletic events on Saturday morning, so it's going to inhibit me from posting them for the next couple of Saturdays, but after that, we should get to a Saturday schedule on this show. Thanks for tuning in. Don't forget to like and subscribe to the channel if you haven't. Maybe check out some of our other videos. Leave me a comment down below. Thanks for tuning in. Have a great weekend. We'll see you next week.